What's up, everybody? Welcome aboard to Trading Live with Bubba. It is Tuesday, June the 25th. And, well, I don't know what to tell you. It's a very, very challenging, tough market to trade. There's a lot of very light volume. It is the end of the quarter on Friday, so you could see just about anything. If you were watching yesterday, you saw a market that was totally mixed. You had the NASDAQ and the S&P got clobbered. Okay, versus the Dow and the Russell, which were both higher. Today, we're kind of seeing a little bit of the opposite. The NASDAQ and the S&P are railing. The Dow and the Russell are lower. Again, this is a lot of window dressing, a lot of work to get there. And the only thing I can think of by the big sell-off is they could be possibly trying to set up a big short squeeze for Friday. Because if you understand the advisory business or the advisor business, there could be a lot of window dressing, especially after a big quarter. Because, of course, that's how they get paid. So in the meantime, the actual trading activity that we're looking at here for our day trades, there's a potential trade we could take in crude now if we'd like to look at it. Certainly, I could look there. And, of course, I will take that trade. And our stop is going to be on this trade is going to be 82.22. 82.22. Okay. And again, it's really, truthfully, if I wasn't going to be here, I'd be doing something else right now because the markets themselves are not very cooperative. There's not enough action. There's not enough emotion in this market. I'm just setting up my orders so I can take some off if they come our way. But again, as you're looking, you can see the volumes are brutal. Okay. Normally I'm looking for 5,000 in the Dow. We've got under 2,000. Normally 5,000 in the Russell, under 2,000. Normally 40,000 in the S&P, we're under 10. And of course, normally 15,000 in the NASDAQ, and we're at about 5. So again, this is a very challenging market to trade. So we'll look at what's going on elsewhere and see if we can find some stuff. And as we talked about last week, selling that premium was the right way to go. It paid off. And of course, our trade last week paid off as well. I mean, you look at Apple, it's kind of in the middle of nowhere. I think you're getting a little bit of bounce here. To me, I don't want to do anything with Apple here. Okay, it looks like it wants to go higher, but there's really not much room to fluctuate. I certainly wouldn't mind selling put spreads on a little bit of a sell-off, and I certainly wouldn't mind selling call spreads if we rally up to the top. Amazon continues to charge higher. Now, you can see, as we talked about on Thursday, it was a little bit down towards support. Maybe sell some put spreads. Well, you got the big rally. It got a little bit overbought. Here we are again, close. But I would be waiting for about 190 if I wanted to get in. And I think what you have to recognize and realize in today's market, there's not much going on. So when the markets lack emotion and they lack anybody chasing it up or down, it takes away a lot of our edge that we're creating by the way that we trade. And when the markets are so slow and lack any real movement, you can get these bigger moves that can take you out of a trade, even if a trade turns out to be right, but they can take you out before you get there. So I think you just want to be very, very careful in here. I would look at Bido. Now, again, we don't trade that regularly, but it is extremely oversold. Bitcoin's been getting clobbered. This is a ETF directly correlated to the future. Certainly, I have already sold put spreads here. And I've actually bought some 23 calls that expire on Friday. I'm taking a crack here. Again, it's more of a gamble than anything else. But again, when I'm playing a commodity or a future like Bitcoin, the crypto, it could go anywhere. I mean, it could go down to zero, or it could be 75,000. So again, I'm willing to take that kind of risk because I could get paid off, and my risk is very small here. Coin. Again, came down, got very oversold, actually almost a blow off yesterday, and it is bouncing. And again, these should not be surprises. These should be things that you should actually expect to happen when you see these patterns appear. Now, they're not going to always appear. They're not going to always reverse direction or make you a winner. But remember, if you're selling premium, it doesn't have to go in your favor. It just can't go against you. Okay, if you're trading the futures market, well, then again, you obviously needs to go in your favor. So as we're looking, we've got a small profit in our crude trade. Now, again, I haven't been able to take any off yet. I've only got 4 or 5 ticks, and my first target to get one off out of the 4 that I have on is 10 ticks. But as we sit here and as I watch it, based on what I'm looking at, this should be potentially some support. So I'm willing to watch this, but what I'm going to do now is I'm going to go ahead and lock in 1 tick profit so that I don't have to worry about it. Because again, I hate when you get into these slow, dull markets because they could rip there easily if they decide. I'm still working my orders to buy, but now I know for sure that I have no risk on this trade. I've got my stop in at a place to cover the cost of the trade. So basically, if I get stopped out, I can afford to go buy a cup of coffee. Okay. Again, the euro currency, again, these are all trades that are potential, but again, I'm not, unless I get exactly what I want, I'm really not all that interested to try to get involved here. I think this is the time that you look for safer ways to trade, knowing that being active right here is probably not the best course of action. And again, so if you start to look and go back to the premium side, okay, we look at crowd. It's in the middle of nowhere. Nothing for me to do here. Okay, it was a trade that I cashed last week, but there's nothing to do right now. Okay, Meta a little bit higher, probably closer to 515 or so. If it keeps running, then I'd be happy to sell it. Notice, big update, $10, no value. Okay, Google continues to push. Now, Google is one I would definitely look at even right here. Okay, now I leave that up to you if you want to make that trade, but Google is certainly overbought. I don't think it's going to go much past 185 on this move. And I think you have an excellent chance if you're patient enough to wait to see if it'll continue to push closer. There's an old saying in trading, better to wish you were in a trade than to wish you were not. Okay. And I think that if you're patient enough, you might very much get a rally close to 185. And then it becomes, I think, a much better sale and you get much better premium. Okay. But again, that's up to you. IWM just kind of floating down near the bottom. Not much to do. If it sells off a little bit more, I would certainly sell some put spreads. Notice that we're not taking an opinion on the market. We're looking for high probability trades, overbought or oversold, that we can just take advantage of the premium, because our objective and our goals are to continue to add to our account to make it bigger. And if the activity and the fast-paced stuff is not there, well, then we'll just take what we can until that changes. And I think that's something that is important for you to recognize as a trader. Okay, you want to put yourself in the best position. And right now, again, you're looking at this. This is worse than watching paint dry. Okay. Now, again, we do have the one trade on. It looks like we're going to get one off here if you're in with me. Okay, so we got one off. So now I've locked in and guaranteed a profit of at least 15 ticks. Okay, which is either $15 if you're trading micros or $150 if you're trading the big ones. Again, just depending on what you're trading. Doesn't really matter. What matters is that you're making profit. Okay, the matters is that you're trading your account according to the amount of money that you have and the size of your account. So let's go back over here and see what's going on, because there isn't much going on here. It's not like I'm dying to trade. Moderna, again, got it bounced off, oversold conditions. Again, not right now. I'm not really looking at it. Let's see, come back down again. Microsoft, getting close to that point. I think if it gets up close to 450, 455, I would certainly look at selling some call spreads here. And again, I got no opinion on Microsoft either way, but all I'm doing is taking the probability side of what it should do. And if it reaches up there, it should, at worst, go sideways. And I've only got 3 days. Now, the interesting quirk in this week's market, we do have Friday, right, which is the end of the quarter. If it's a big rally, some of these could get punished. But I think that the risk is worth taking, because I think that we're into a position that are already extremely overbought. So again, that would be just something to think about. Certainly, if you decided that, hey, I don't want to be involved this week, that's okay too. Okay. Again, the markets are open 241 days a year. You don't have to play every single day. Okay. If there's nothing that fits what you're seeing, then you're gonna find yourself better off, because making a decision not to make a trade is the same as making a decision to trade. So, don't force yourself into markets that you're not comfortable with, or if you're not comfortable with what the situation is. Wait until you find what you're comfortable with. That's something that is always important to understand when you're trading NVIDIA. Okay, now I did sell put spreads here the other day. I'm still a little bit underwater, but again, it won't take long for me to get out of underwater with a little bit of a rally. But certainly, as I said on my call last night, certainly I would be a buyer of NVIDIA today, should I get the opportunity, because again, I'm assuming for a bounce to come here. Okay, just based on the way that it sold off and the heavy volume that it had in comparison. Okay, so that looked like a little bit of a panic sell of those that were afraid that it could get in trouble. The Qs, kind of in the middle of nowhere, really not much doing. Of course, that damage was done yesterday, and of course that took away. You had the opportunity, going to end of last week, but again, we're not going to get every trade. So don't think that you're going to get every trade, because you're not. Okay. You've got to focus on what you're trying to look at and what you're trying to find. All right. So we just got stopped out of our crude. Okay. Which is fine. We made money, made, like I said, between $15 and $150. That's what it is. Okay. And Square, getting a little bit towards the top end, I would certainly be looking at potentially selling call spreads in Square. Okay. Tesla. Oops. I'll go back to there in a minute. As we talked about in Tesla, we assume it would break one way or the other. It is trying to break to the upside. Now it is hovering on support at an overbought condition. So it's kind of like a weird quirk in trading. Okay, you're overbought, but you're dead on support, which shows you the lack of volatility that has been involved in Tesla. So there's really no trade here. Okay, there's really no trade here. In fact, I think there's a greater chance, even though it is overbought, that it breaks to the upside if it breaks. So I would rather just pass and wait. Win, just sucking down the bottom. But again, if you would have sold put spreads back here, again, it didn't have to go in your favor. It just doesn't have to go against you, which they would have been fine. They would cash. And that's what I'd be looking at here. XBI, I would certainly look to be a seller of call spreads in here. Again, I'm not willing to take any substantial positions in these markets. Why? Because there's no real action. Okay. If I was dead right, how much could I make? Okay. And so it's easier to take the premium route when you have conditions like this, because this allows you to be involved in the market. It allows you to participate, make some money. Okay. Take some very light risk so that you're not exposing something in a market that is really doing nothing. And as we go back and look real quick, you can see that there is really very little happening. So where am I going to be able to go, and how am I going to be able to make any real money without putting myself at pretty dramatic risk? And I'm not going to put myself in major risk, nor would I put you in that kind of risk, because to me, it doesn't make a lot of sense. Okay. I think that you just have to, again, you have to be patient enough to wait for the markets. XLE, as we looked at last week, obviously an opportunity. If you didn't take it, no big deal. Now you're waiting for it to rally so you can take the opposite side. Again, all we're doing right now is playing a straight probability model. They get overbought, we're going to sell them. They get oversold, we're going to buy them. And we're going to do that by using premium so that we don't have to expose a lot of risk because of the lack of speed, the lack of activity, the lack of emotional trading. We make our most money when the markets are highly emotional, because that means that the traders that we're trading against, remember, this is a competition. We're competing against others. When they're highly emotional, they're wrong. Okay. So we want to give them what they want. And right now you can see by the lack of movement, by the lack of activity, that there is no emotion in this market right now. So if there's no emotion, what is the point of getting heavily involved in Zoom? To me, it was perfectly where we thought it would bounce from. And I don't think it's going higher than 60. If it gets back to 60, I'd be a seller of call spreads again. Again, this is really what we have, a market that lacks any real activity. There's really very little concern. And again, if you look at yesterday, for example, and the amount that the NASDAQ was down, okay, it was only 1%. So, don't think of the markets in the size of the number. Think of it in size of the percentage. Because when I first started trading, okay, the Dow was at 800. Okay, now it's 40,000. Okay. In 1987, the market went down 22%. Okay. So today, 500 points in the Dow is just over 1%. So remember, it's a percentage loss, not the number. The numbers confuse people and they get too excited about what the numbers are versus understanding that it's purely based on percentage moves. Okay. Because everything is in coordination with the percentage of movement. But right now we have virtually no movement. Okay. So you're getting a little bit of a chase up here in the NASDAQ. But again, there's zero volume right here. If the volume would get up to here, I would look at it. But again, I'm not all that excited to do anything right now. This to me is a market that lacks true opportunity. I think you're putting yourself in a period of much greater risk when the markets are like this. I mean, it's very slow, it's very thin, and again, out of nowhere, you could get rocked. And I don't think that that's what we're trying to do. I think we want to continue to, watch the charts, recognize the patterns that you're seeing, and then wait for opportunity. Okay. And right now, again, there really is very little opportunity. Okay. Now I could take a look potentially. Now this is not enough volume for me. I am not going to fire into this. Okay. Now here's the difference. If we were really busy and we're making a lot of trades, I would take this trade. Okay. But I don't want one trade to be the defining of how my day is going to go. Okay. I want to be able to make a lot of trades and I want to have a lot of action because that's where you get to make money when you're making the same exact type of trade over many markets that are very busy. You can make big money. Okay. Even with having losses on a few of them. But when the markets are like this, you don't want to take the chance nor put yourself in that risk factor because you've only got one trade to make. Okay. And there really is legitimately only one trade to make as it looks right now. Now, again, it can change at any point in time during the day. But right now, it is as slow as can be. And it doesn't figure now that we're coming up on the 11 o'clock hour Eastern time. We'll get into the lunchtime, which is usually pretty slow. Your last bastion, your last chance for any real action is probably the closing hour, if any. And lately, the closing hour has not been that strong either, because again, you can see that the lack of volume and the lack of market participants, which is what you're looking at, we continue to see volume decline. Okay. So with declining volume, where does that leave your opportunity? Okay. Now I'm sure you can find a stock somewhere that has real activity that you'd want to participate. But again, out of the ones that we looked at the potential trades that we could make if we wanted to make. And I told you which ones I've already made. I've already sold the Qs and I've already sold the S&P, which right now they're probably a little bit against me at the moment, but it's a long day and I'm not going to worry about where they go. Again, when I put those trades on, I know what the risk is and I'm willing to hold them all day long because I don't have to worry. I know exactly what I'm exposed to. I know exactly what I can make. So I am not going to worry about that position. I'm going to let the markets, dictate to me, just like I'm doing. To me, the rally should be sold, and I'm going to look to sell it. Okay, and of course, in the Russell, I'm looking to buy it or sell put spreads. And I think that this is again something that you want to learn to focus on is the different market conditions will give you different types of opportunities. And right now, the opportunity that you want to take benefit of is the opportunity to sell some premium, to give yourself, to build up a little base of income, a little base to your account with very low risk so that you are prepared when we actually get busy. Okay. Now, there is a chance that we could get a trade in either the NASDAQ or the S&P or even gold. There is a chance. But again, the real question now will be, if you're trading with me and you need guidance, you won't have me because I'll be gone. Okay. And the other question is, do you really want to get involved? And that's what you have to look at. And to me, I don't really want to get involved. And I've been doing this for 45 years. And I just know that when I was on the trading floor, I'd be already on my way to the golf course right now. So with that, everybody have a great day. We'll see you back here on Thursday. And just be careful, pick your spots, and make sure you're trying to get the edge. And have a great day, everybody. We'll see you Thursday.
Thanks for watching. Please be sure to take some time to read the disclaimer. Thank you.